Focus back to the market and that Nestle stock reaction, which is very interesting. Stocks back up about 1.5%. Mangalam's here. Mangalam, what's the read-through?
Well, these are good numbers from Nestle, especially on the operational front, and which is why the stock has moved higher as well. You know, most on the street were expecting a double-digit mid-teens sort of growth, and that's primarily because Nestle is relatively less impacted by the slowdown that we're seeing in rural, because most of the Nestle sales come in from urban itself, and in rural also, which is about 20-25% of their sales, they are increasing their distribution, so that alone would cause their revenue to grow. So that's a positive. Secondly, the worry was that because of the high inflation that we're seeing in dairy, because of lumpy skin disease, etc., you know, that could impact their margins. Yes, it has impacted their gross margins by about 200 basis points, but that hasn't impacted their EBITDA by as much. So, you know, the company has been smart in passing on prices, at the same time, you know, maintaining their margins and optimizing their costs. As a result of which, the margins have come in at 23%, as against street expectations of 21.5%, and which is what has led to a mild beat that we're seeing in the net profit. The domestic business for the company grew at around 13.8%. The exports, which is about 3 to 4% of their overall sales, has also grown at 17%. And going forward, the big trigger for Nestle will be the increased sales coming in from their pet care vertical Purina and the Gerber, cereal baby food products that they have launched in India, which would be high realizations as well. My sense is that maybe to protect their margins, the company has taken higher price hikes, which is why the revenue at 15% growth is slightly lower than street expectations of 17%, but they more than made up for it by improving their margins, as a result of which the stock is higher as we speak.
Mangalam, thank you very much for that. Naveen Kulkarni, CIO at Axis Securities PMS, is now with us on the show. Naveen, would you concur that perhaps the company has taken more price hikes, which is why the volume growth may be a little subdued and there is a bit of a revenue miss, but the margin performance looks absolutely fabulous? Thoughts on the numbers?
Yeah, that's a possibility, because EBITDA has beaten our expectations by close to around 7 to 8%, right? So that's a significant beat on our expectations. So we were actually expecting the EBITDA margins to be lower than what the company has reported. So it could be on account of probably the mix being more skewed towards pricing than towards volume, because that has a significant impact on the EBITDA numbers. Overall, nonetheless, I would say that these are pretty good numbers. Nestle has been doing quite well. In fact, Q2 numbers also surprised us positively, and Q3 also has surprised us positively. So that's almost 2 quarters that the company has managed to beat our expectations. So overall, I would say that a pretty good operating performance from Nestle.
Okay, pretty good operating performance, and the street also seems to like that. The stock is up 1.3% as we speak. Naveen, very quickly, what is your rating on the stock? And if you could take us through the target price on this one as well.
So we will review the target price after having a look at the numbers in detail. So right now I'll not be able to comment on the target price, but post working out the numbers, we'll be able to figure out what could be the target price. But overall, it looks to be quite positive to me, and I think Nestle can still deliver 12 to 13% returns in the next 1 year.
Okay, can deliver 12 to 13% returns. We are also waiting by for the management commentary, to understand what they think of demand, what the inflation picture is really looking like for them. And I guess it'll be important to watch how the pet care business has done as well. That was one of the, that's something that we're going to track as well from the management. But with that, we are going to wind down on this edition of Trading Hour. You stay tuned. Halftime report comes up next, and they're going to take all of this action forward.
Brought to you by